Have gold bulls finally started to understand how economics works? Let's check out the chart and see where we could be heading next. July 22nd is where we saw a quadruple bottom confirmation on gold. This was pretty phenomenal as we saw 1680 hold for the fourth time in 3 years, dating back to when we saw the initial move in post-COVID announcement down to 1680, double bottom holding, marking the way for a price move back again towards that $2,000 an ounce mark. Yet again, a year after or later on in the year, we saw a bit of a flash crash and an immediate bounce back again up on gold. We saw that recently here. This forms the foundation of today's analysis because what we will be assessing is if gold now has more room or perhaps a signal again technically to move back to the upside. Now we saw ever since that bounce on 1680, gold made its way to the 1800 mark recently, and then a sell-off again as the dollar got stronger and the indices had another turn to the downside. But what traders are starting to price in now is real-time economics. The facts remain. Inflation is still at 8.5%. Interest rates are yet to rise there, and to curb those inflationary risks, US inflation still currently sits at 2.5%. Jerome Powell set to speak at Jackson Hole to give any indication of that rising further. That's what traders are waiting for. But the reality is inflation is way out of control at those decade highs, multi-decade highs rather, and having real impacts on the economy, commodity prices rising, cost of living rising, wages not rising at the same pace, impacting large amounts of populations right across the globe. But if we're talking about the US specifically, we are having economic data contract. For example, PMI contracted to the lowest level since 2020. So is that recovery still on? That is the question. And if we go back to the gold chart, what is gold used for? And going back to the purpose of holding gold, well, it's a hedge against inflation. Now, if interest rates are rising, that opportunity cost of holding gold also rises. However, if interest rates do not rise at the rate markets would expect, given the current inflation rate, we could see another bullish signal in gold fundamentally, which matches up perfectly on this chart. If we look at this recent support level, just above the 1720 mark, we saw a retest at the bottom of this trend line here, perhaps a fake out at that 1800 level, but with a support test at 1720 and a hold of this moving back towards 1746 is another strong indication that this market is well supported and could well be in a great position to have another move towards the upside should we get a solid hold again of this 720 mark. If we go back in time here, we go back to 2021, we did have a support hold at the same level. It was a double bottom formation there. Of course, we went below it in July of this year. However, we have held it again at this recent support area and matches pretty nicely with this trend line heading all the way up to those record highs in gold, down to the recent low, and a baseline test of this here at 1720. So what we could see now is markets start to look for any sign to recover that recent loss and head right back up to that $1,800 mark, where it could see more comfort given the current economic environment, and then potentially assessing whether interest rates rise enough sufficiently to support the ongoing inflationary pressures. Is that interest rate rise going to be enough to curb inflation? We are yet to see, but it is looking pretty unlikely now as commodity prices are still trading at those record highs, and we're still seeing a lot of pressure coming onto the economy following all of the stimulus over the last few years. And economists mostly are expecting that to continue for the next calendar year until we see any form of relief in inflation, which for gold bulls paints a perfect story. In theory, higher inflation means a higher appetite to hold gold, where in theory we could well see movement back into that $2,000 an ounce mark should we get a bullish scenario given all of those economic factors in place. So do trade safe. I hope you enjoyed the analysis. We will keep more of this coming, so stay tuned. All the best.